Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that continued just red on the charts as we do see Bitcoin sinking deeper into the abyss. And guys, let's just get to the core of that. Of course, we were talking about how, we were seeing the potential for some volatility with the federal chairman Powell testifying at the Senate and also in the House in the last couple days. And my pets are just running around the house just crazy right now, so it's just making me laugh. But guys, we did see a significant amount of volatility, and that push to the bottom. They are just wrecking up the place. That push to the bottom of our kind of support area that we had there really hasn't gone through yet. We haven't broken through any support. We are still just kind of kissing the top of the support, and so that final boss is still in place there. I'll show you the chart in just a moment, but what I did want to mention is that we do have significant jobless claims coming in on today's report, and so that could give a little bit of an encouraging sign to the market because, of course, the Federal Reserve does want to see those jobless claims rising. That's because the Fed believes this economy is overheated, and that's actually true. So we do need to have some type of recessionary forces to help the Fed pull back inflation. Otherwise, hyperinflation is just going to get out of control. And there's only really three ways to do that. Republicans could tax the rich. They could tax the people that got all the stimmies, that got all the business loans. They could get all of that liquidity back into the Federal Reserve as opposed to just floating out there, being used to buy back their own stocks, being used for vacations, being used for God knows what. They could just get it back, right, into the coffers there, and that would also bring inflation down. Number two, right, the Democrats, right, they could stop spending so much. Oh, wow, how about that idea? Maybe we should actually spend only the amount of money that we have so that we don't have to print more money, right? Well, guys, those are two heads of the same double-headed snake there. So, guys, neither party is doing their job, and so that forces the Federal Reserve to essentially increase interest rates, which essentially cools down the economy, which, to put it in another way, it kills jobs and it also causes a recession. And, we don't actually give the Federal Reserve a pass here either because they're the ones who brought the interest rates down super low, which turbocharged the economy. They totally overshot during the virus era, and it just has obviously wrecked everything. Now, guys, we do know that recessions and interest rates, all of these things, they have cycles. But the thing about it is that we had an accelerated cycle essentially, and it was pushed to its extremes by the dirty work of Jerome Powell, starting in the Trump administration, and then, of course, he continued it in the Biden administration, and now he's extremely late in trying to correct all of this. And, who pays for that? Of course, it's you and me and the little guy and all of this stuff. And, that's just how it goes. That's the nature of history. And, of course, we should hold our government accountable for that. But, instead, they just have us fighting over people's pronouns, which who cares? Like, I don't care. None of my business, right? And suddenly it's everybody's business, okay? Why? Because obviously both parties are killing us right now. And so they want us to fight each other as opposed to holding them accountable, right? And I just don't know. This world is screwy. It's like they're trying to pinhole you into either a civil war or a World War III kind of scenario. And guys, I mean, let's just try to be a little bit smarter than those dimwits, okay? Can we just step out of the box just a little bit and say, hey, maybe my state does deserve to have the right to just make a little bit more local laws, that conform to what our people would like to see in the states, right? And maybe California can do their thing, right? Florida can do their thing. Texas can do their thing. New York can do their thing. And, we're a big family. You can move state to state. Let's not just demonize each other. Let's actually say, hey, that's cool that you're doing that, California. Not what I would do, right? But more power to you, and good luck with that. We're gonna do what we want to do in Florida, right? Instead, they're like, I'm gonna like, these demon rats and these Republic. Can't say the last word on YouTube, but guys, we really have to get out of this because what's destroying the U.S. right now, what's actually suppressing the world right now, is just this insane politics, which is not allowing for any type of solutions. Meanwhile, they're doing the craziest things like hyperinflation, hyper spending, printing, all this stuff, floating ideas like $1 trillion coins, etc. Just a bunch of nutty, the animals are running the zoo, right? All right, guys, rant over, but let's see how much time did I actually eat there. Oh no, I did 6 minutes of that. Sorry about that, guys. But let's just jump to the charts here because what we are going to see is that the CPI data coming up next week and the PPI data is really going to influence this chart here about the target rate for the Federal Reserve. And right now, the market is betting on 80% of the market. Sorry, just getting a drink of coffee at this 8 a.m. hour over here. 80% of the market is, betting on the fact that the Federal Reserve will probably do 50 basis points increase. Now, they could be overshooting that. If they're overshooting that, then there is the possibility that we pump. But of course, if they do 50 basis points or even more, then probably we're going to test our market lows, maybe even make new lows. But hey, 25 basis points, there's room for us to pump in the market. Or if the Fed says that they're just going to take a pause, just think about it, get a little bit more data, then probably this market could just suddenly rocket, okay? So, mm, you know, this market has been really kind of trying to essentially distribute on the heads of the retail. And so I really do believe that the market would take that opportunity to pump so that the smart money can basically offload some more of their stocks to the retail. But we're going to have to wait for that. The CPI data comes out next week, as I mentioned in the previous episode, on March 14th, and then the PPI on March 15th. So, again, beware. The Ides of March, that really will be the nail in the coffin for probably what the Fed decides to do. And these jobs reports that we're getting, they're kind of helping us a little bit right now. Let's see. JOLTS came out, so job openings, it's a little bit hotter than expected. So, I don't know. Oh, geez. This one's hotter than expected also, right? So, hmm. But jobless up, I don't know. Guys, this is a mixed bag. It's all overheated, to be honest, on average. So, I just can't really predict if the Fed is going to take action now, or are they going to wait another month? Are they going to try to say, we need 3 pieces of data in a row? I mean, 3 months of data in a row in order to have a quarter to kind of look at? Are they going to kick the can down the road? They've been really good at doing that. And so, let's just play it by ear there. Guys, let's go ahead and take a look at Bitcoin. Of course, Bitcoin is trying to hold this level, which, it hasn't broken the lows yet of it, but it's essentially lost it, like I was saying in the beginning of the episode. We really had this kind of line here, and we're starting to lose that. We do have this descending wedge that I'm looking at here, and the bottom of that would be somewhere around this support level around 20. 1,000 to 20,500, and so this is a natural area that personally I'm looking at to possibly buy. I mean, we could do also a little wick kind of thing, and then maybe like that. That would be cool too. Um, or who knows, maybe we just fall straight down. So you're going to want to have your stop losses somewhere, right? But this is basically the game plan that I'm looking at here. And yeah, that's it in a nutshell. I really don't need to do more than that. But let's go ahead and take a look at the 4 hour. And let's see here. I do have some key price levels for you to watch. And first thing you want to notice about the 4 hour, guys, is we are solidly in the bearish control zone on the RSI. So those of you who think that we're just going to pump to Valhalla right now, or you know, I don't know, just look, we're in the middle of a of a descending channel, basically, or whatever you want to call it, this descending triangle, and falling wedge, whatever, and after tapping the top, is it likely that you're going to tap the top again, or is it more likely that you're going to tap the bottom? Even if we play around with this, I mean, there's a case to be made that we did just do this kind of thing. Maybe this was a deviation, maybe this was a deviation, and this was a deviation. That's a lot of deviations. I mean, I would consider that more of like a tap trend myself, right? So just being as generous as possible, maybe something like that. But it would still suggest that we have room to push down, right? And so, just using this wedge model, I would think that we would tap a little bit lower before any type of a bounce, and then not being generous at all, maybe come down all the way to 21,000, even wick below that, and then get some lift off of there. But that's just a hypothesis based upon this type of a pattern here. Let's zoom in into that bearish control zone, which we are underneath, and see what price action needs to do on the 4 hour, which will be closing in 3.5 hours. What it needs to do in order to survive here, just to hold our momentum to the upside on the 4 hour, because we do have this little bit of a bounce here, right? See this little higher lows on these wicks, which isn't necessarily a great sign, to be honest. You can see higher drop, right? Higher, maybe another drop. But if we want to hold that, then we are going to need to get above 21,640 on a 4 hour basis. And to be honest, I don't feel really comfortable with that unless we're above 21,656. And then to continue to the upside, really I want to see us above 21,700. That's going to give us our best chance. And, to get out of that bearish control zone, we really need to get above 21,830. Look at this wick over here. I mean, bulls tried and they failed. Okay, so that's what happened last night, basically. Bulls tried to get out of the bearish control zone and they just got absolutely slapped back down on the 4 hour, and that's why we are kind of seeing this push. Now, as long as we're under that 4 hour volatility pivot, I think the bias on the 4 hour is to the downside. Guys, that's enough for the 4 hour. A lot of you won't even see it in order to trade off of it. But if you do see this video early, there you go. Let's take a look at the daily now. This should be relevant to most of you guys. And the daily gives us a little bit of a different picture. Yes, the bears are in control on the daily as well. But, well, to be perfectly honest, it doesn't give us a different picture, does it? No, it does not. The bears are in control, okay? So basically, we entered the daily bearish control zone underneath 21,732. If you'd like to get out of there, then we do need to reclaim that number, that 21,732, okay? You can approximate that as 21,700 just to get, just to sustain this little tiny baby bounce that we've got here, off of this area over here. That doesn't look too enthusiastic. Look at these wicks over here. That was very enthusiastic. We got a nice bounce off of it. Look at this one. Really nice bounce off of that, right? what is this? This is nothing, right? This is nothing. So I don't know if this drop is done yet. Like I said, I think we may have another tap at least before we get a real bounce. But hey, bulls can dream, right? And personally, I'm not a perma bull. I'm not a perma bear. Just a clever little alpha monkey trying to figure out my way to some type of trade. Guys, we won't get above the daily volatility pivot unless we're above 21,810. So, you hear guys talking about the 21,700 level. All right. I mean, if that's your style of trading, but personally, I'm a volatility trader. I want the volatility at my back. I want the wind at my back so that it pushes me forward. And so personally, I don't see anything interesting here unless we're above 21,810. Then I'm going to look at our, support area over here, which might be, 21,900-ish. And should we get above there, then maybe I'm taking that trade to the top of this wedge. But in order to have continuation out of this wedge, perhaps a measured move all the way up to 24,000 or so, maybe retesting this bullish control zone, then we really are going to have to break above 22,500. And best shot is above 22,600 because that's going to just break out of this little wiki area that we have here. And it's also going to add a little bit of momentum on the RSI. So personally, I'm a little bit more of a conservative trader myself. So 22,600 is what I'm looking for there. So first level 21,810, then 22,600. And then, we can talk about potentially trying to reclaim this 24,000 level. Until then, bias is just to the downside. Guys, we do have the 2-day closing today as well. So in 7 hours, the 2-day chart will be closing. Let's just jump over to the 2-day chart, see what that looks like. Ugh, right? Ugh. The good thing about the 2-day is that bears are not in control. We still are a little bit more in that ambiguous zone. But problematically, we do have the volatility pivot above our head. So volatility, again, that wind is at our back, but to the downside this time, right? So I want the wind to our back while we're pumping up in order to be bullish, but it's at our back as we're dropping, and so I just have a bias to the downside as continuation here. You can see that we've lost our hold momentum, so I just see this as continuation to the downside. General continuation on our MACD is to the downside. I don't know who's taking this trade right now, but we were at 21,700 when I was planning this video, and we just continuing to drop. So it is what it is, my man. Guys, we do have the bearish control zone at 20,200. So I am hoping that if we do drop to that 21,000, 20,000-ish area, that we don't violate 20,200. If we can hang on to that, there's actually several higher time frames that are using this area as support, and we could get a bounce off of that. So personally, I'm not so concerned with this one over here. Often we have little double bounces and stuff, so I don't really pay too much attention to this one, but I am really paying attention to this area, especially as it aligns with this stuff over here and kind of the center of the chart over here. Really don't want to lose that. Now, a lot of people are focused on this 18,000, and I understand why. There's probably a lot of volume down there, a lot of liquidity that could be tapped, but we break down there, and it's not going to look good to me. Okay, so they took a lot of work to get up here, and it's just could we continue lower in that case? Are we just making a lower high here? And we're just going to be pushing down. Is this a double top? I'd rather get a higher low and just try for another push back up. But we'll see. We'll see. The higher time frames, they don't look so terrible. One thing that I don't like that's going on here is, let's go ahead and just take a look at our 2-day volatility. You can see this thing's just chopping sideways. I told you, it's really weird, right? Let's look over to the daily. Just kind of chopping sideways. I told you a couple episodes ago, I told you this is just very weird. Let's look at the 4-hour. You're just doing some type of little flip right now, not really sure where it's going to go, but it's still the middle of the chart. But the thing that is really interesting to me is like the 5-day. 5-day has this push to the downside, and it isn't finished yet. Okay, let's look at the 3-day. 3-day is starting to get settled, so maybe a little bit sideways. Let's take a look at the weekly, because the weekly is also important. The weekly also is starting to, it had a flip when we were pushing down. So is this thing going to flip again? Well, it looks like it's broadening. And the 5-day looks like it's broadening. And let's go to the 2-week. And then the 2 weeks choppy. So essentially the weekly and the 5-day are giving me concern that we're going to continue to push down. They haven't closed yet in terms of their volatility push to the downside. And so let's see, let's go to the charts. Let's see, the weekly closes in about 4 days, 3 to 4 days. And then the 5-day closes in about 2 to 3 days. So let's just say 2 to 4 days from now, I think that this move is going to be settled. Personally, that's what I'm looking for. Um, but I do think that we could have some, we could have some greater push to the downside over the next couple days. We're on the 5-day right now. Just look at this. Expanding to the downside, okay? So, or rather contracting to the downside. So I don't see this as necessarily done, okay? Look at our, Stoke. Our Stoke is still pointed to the downside and it was quite overheated. We didn't really get any type of a bounce like this yet. Maybe we could in the next couple days, somewhere here around the 60 to 70 area. But we seem to be just pushing down right now on the Stoke. Volatility just expanding to the downside, contracting rather. We have the ADX DI negative pushing up. The green is coming down quite sharply. It is starting to soften, but still. And then we look at our RSI, and you can see that the RSI has broken to the downside. This is the 5-day, guys. This isn't something to sneeze at, right? Could we get into this 50 area and get a little bit of a bounciness in this 40 to 50 area? Yeah, sure. I mean, also we have like these tops over here, these peaks. So maybe we could get a little bounciness off of that area. But that would still suggest some continuation to the downside. And let's see, what else can we take a look at? Yeah, let's just take a look at our kind of momentum oscillators here, and we can see they're all curling to the downside. Nothing looks really like it's pulling up. This stuff looks like it wants to round down. It looks like this one hasn't even started to round down yet. And the rest of them look like they're just keeling over. So do I see the 5-day as done? Do I see the weekly as done? No, I think that we could have more continuation to the downside. And look, we're almost to 21,600 as we speak. So I was planning this when we were holding 21,700 pretty firmly. We held it basically through the night, but anyway, guys, look at the MACD. I mean, it looks like it's keeling over here. So it's probably going to want to twist or something, like get a little twistiness into it. And that could just pull us down a little bit more, right? I mean, this thing doesn't look like it's done yet. Looks like it wants to pull down. And again, this is the 5-day chart. So that suggests that 2 to 4 more days of pain could be possible, sideways or down in terms of a bias, and that we may even have to take a status check on the 5-day and the weekly by the time that we get there. So I don't know. We could randomly bounce because of the news that I talked about in terms of the CPI data or the PPI data next week. And maybe, that timing is actually very similar with the market watch there. Let's see here. What's the date today? The 9th? Yeah, so we have basically 5 days until the 14th. So maybe we got some kind of a push down, and then maybe the CPI data comes in hotter than expected or cooler than expected, and then the chart makes its decision of which direction it wants to, either sharpen its direction down or maybe get a little bit of a bounce. That's what I'm seeing right now. So sorry not to have great news there. if we do have a chance for a bounce, because there's a certain amount of randomness in markets, but if we do have a chance to bounce, it is going to be right here, or it's going to be, at that 2,500 kind of area. So I don't know. I just don't see it right now. I just don't see it on the chart. So I'm not trading this to the upside, guys. I am just biased to the downside right now. And I am paying attention to this wedge because this thing could be, this thing could be the little fake out thingy that kind of sends us up. And who knows, maybe we come back down, or maybe we don't even breach this high and then we come back down. Then we got that head and shoulders that pushes us to the downside. A lot of people looking for this head and shoulders. Not sure why you're looking for a head and shoulders as opposed to also looking for the upside. Just hard for them to imagine it, I guess, because everything feels really bearish right now. But you do have to look for the upside also. And I'm not seeing a head and shoulders right now. I'm seeing a falling wedge that has a 70% chance of breaking to the upside. Okay, yeah, often we have little fake outs at the bottom, but still 70% chance to break to the upside. So, yes, the measured move on that would be in this area. And if that had a rejection there that then broke the neckline, then we could talk about head and shoulders to the downside. But everyone talking about head and shoulders right now, down to 18K, I mean, they may end up being right. It's just they have no evidence for it whatsoever. Okay, they have no evidence for it whatsoever right now. They don't even have the setup available. Okay, so again, don't be a perma bear, don't be a perma bull. Things change really fast in the world of crypto. And we do have to wait for that CPI data. We have to wait for the PPI data. We have to see what Europe's going to do in terms of interest rates because they can kind of cancel out what the US is doing. They can kind of push the dollar down a bit, right? And then we do have to see what Jerome Powell decides on March 22nd and how the dollar is going to respond to that. And we also have to be aware of what the market is actually pricing in, because if the market's already pricing it in, then it's not going to push us that much deeper, right? If the market's saying, hey, I think we're going to go down 50 basis points because of the Fed, they're so bearish, but then the Fed only does 25 basis points, then what's going to happen? We're going to get a little bouncy bounce, right? Or a little sideways or up, right? So again, guys, it's just sometimes markets are irrational. And anyway, I think I'm going to leave it there. I do have an appointment to fix some of the rain damage of this place. It's just been torrential rains in California for the last couple weeks. We got some rain damage. Do got to patch that up. And that's what I'm working on right now. Sorry for having not so many episodes. I am trying to be a little bit more efficient and just give the real deal that kind of looks out for a few days. I don't need to give you an update every 5 minutes. You guys are on crack who try to capture every single bounce, okay? Like chill out, like chill out a bit, right? Sometimes you don't have to take every trade, okay? You don't have to take every trade, guys. Just because you're surrounded by traders, it doesn't mean that you have to take every trade. You can just wait for some type of a clear signal in the market, okay? You don't have to be trading in the middle of nowhere. You can consider that as kind of support, but you don't have to be trading in the middle of nowhere on bad news days to the upside or whatever, okay? It doesn't make sense, all right? Let's see here. I think probably since we have a couple things important coming up next week, I'll definitely make sure to get an episode out for that CPI data. And then perhaps something on the weekend just to see where we're starting out the week. But that's your alpha for the day. Stay safe and happy trading.